Hi, my name is John Minnich. I'm joined today by Matt Bay, and we're going to be discussing China's devaluation of its currency over the course of the last couple of days. So, Matt, it seems like markets and also mainstream media reacted very strongly to the depreciation of the Chinese currency over the course of the last 3 or 4 days. But it also seems like, to some extent, mainstream media is either overstating the significance of the devaluation or misidentifying what exactly makes this significant. So, I think that when you look at mainstream media reports, most of them emphasize the impact this is going to have potentially on Chinese exports, and that the motivation is to stimulate Chinese export growth. And this comes after some pretty bad export numbers from China in July. But is there something else going on here? Is there another issue at play?
Right. So, just using the word devaluation has a lot of, meaning for itself. And the idea is that you can actually make the argument, is this really even a devaluation? So what's basically been happening for the last, 6 to 12 months is that the yuan, relative to what they peg the reference rate at, has actually been a lot weaker than that, at least in spot markets, by about 2%. So the way that the yuan typically trades is China sets the reference rate at a certain level, and then they'll allow the spot market to fluctuate up or down 2% around that before the central bank will intervene and either push it up, push it down, depending on what has happened. So for the last 6 to 8 months, basically since you've seen a lot of QE in places like Japan, Europe, and then bad economic data coming out of China, is that it's been kind of weakening in a sense by itself. And then they've actually had to prop it up most of the time. So what has actually changed is now they are taking that reference rate and they just moved it to where the spot market was the previous day. And they're saying, hey, going forward, we're actually going to be just letting each reference rate each day to actually be more reflexive on the previous day's spot market.
And why do you think they did this?
So this is a big part of the long-term strategy that China is doing, where they want to liberalize their control on their currency, which is a decade-long kind of process. So if you go back, to the mid-2000s, up until that point, it was heavily pegged to the dollar. They loosened that peg to a certain degree, but they've had all these controls where they have this trading ban. They've been loosening the trading ban by making that 2% figure go up from 1% to 2%. And then now they're thinking about possibly even increasing that ratio to 3%. And the big shift that we saw on Tuesday was them also then saying, hey, whenever we set the reference rate, we're going to make it more reflexive on the previous day, which is a substantial shift away from that policy. And so now, instead of closely tracking the dollar, they might actually not as closely track the dollar going forward. Of course, the big question is how often are they going to actually intervene to keep it into how long are they going to actually stick to this policy?
And it also seems like the issue here is that this comes against the backdrop of a year in which the dollar has been gaining relative to other major global currencies, the Japanese yen.
Right. And if you look at the trade-weighted exchange rate for China, yes, they export a ton to the United States, but who are the biggest trading partners? It's Korea, it's Japan, and that's the big bulk of where they're going. And then look at Japan. They've gone through this massive stimulus package that's devalued the yen significantly. So you actually look at the currencies weighted to their trade partners. The yuan has actually, over the last year, been stronger than even the dollar has weighted to their own trading. So there's that big aspect too. But we also have to put this into perspective. We're talking about a 2 to 3% devaluation compared to a 10 to 20% devaluation in other countries.
Right. So I guess in thinking about the significance of the depreciation of the yuan over the next couple of days, there would be two main lines of inquiry. One would be looking at the impact it's going to have domestically on the Chinese economy, and also how this fits into the Chinese government's broader economic reform goals. Right. And the other one we'll set aside for now would be the international impact. How is this going to shape the behavior of China's major trade partners, Japan, Korea, the United States, the European Union? So on the domestic front, it seems to me that at least up to now, and if we see the depreciation go, stay within the bounds of 5 to 7% over the course of a year, or over the course of several months, then it seems to me it's not going to have much of an impact on Chinese export performance. Honestly, there are a lot of other factors that are going to affect export performance in China. At the same time, we look at maybe we raise the question of how this could impact household consumption, because understanding this in the relationship to the reform goals, we have the Chinese economy moving from what it has been for the last 20 or 30 years, which is an economy in many ways heavily dependent on low-cost exports, and trying to move from a low-cost export and investment-led economy to one that's grounded in household consumption. So I think that this is potential risk of devaluing the currency or the currency depreciation at this point is that this could actually raise costs for ordinary Chinese consumers, could impact China's ability to, realize these goals of shifting towards a consumption-based economy, and then thinking then about how that plays out regionally as well.
So one of the things you have to kind of consider is that, they're fighting against the perception of the export-oriented model. Right. So now as they actually do start to weaken their currency for a number of reasons, part of them to help exporters out a little bit, and then also the liberalization push in general, is that there's still a stigma attached to China in some places that this is actually, a currency war type thing where they want to, undermine other exporters so they can gain that. But it is not reflective of the entire shift that we see going on in China with all these other reforms towards the consumption. And if we look at things that could impact other countries, I mean, while the export competitiveness is an important thing for places like Japan, all these Southeast Asian countries that are competing to China, the other big impact is that it's also going to reduce China's buying power if they were to substantially reduce the value of the yuan. And for a place like Japan, that's actually probably even more important because, as the United States and Europe have slowed down their economies over the last 5 years since the financial crisis, who has actually been somewhat strong through stimulus, through a number of different reasons, it's been China. So you've seen Japan just become even more intricately connected to the Chinese market, or selling their stuff to China. So this is a double-edged sword for them. And then also, we do have the Bank of Japan considering, increasing their own stimulus package. This only plays into that, to a possibility of doing that even more going forward, of course. And then obviously the one that everybody else is talking about is the United States Fed decision. Right. And this plays into that to a certain degree. The Fed has a different mandate entirely than just defending the U.S. dollar, but at the same time, this does play into their model to some degree. Right. And if anything, it may not reverse a decision to increase interest rates that the Fed makes, but at least might make them want to take a wait and see approach to what China's going to do over the currency over the next couple of weeks, and maybe delay that decision from possibly September to November or something like that.
Well, thank you very much, Matt. We'll certainly be watching closely to see how these incremental shifts play out in the long term in terms of both China's internal reform efforts, but also the implications that has for the behavior of other major regional and global economies, in particular Japan in this case. That's all the time we have for today. If you'd like more, please go to stratfor.com.